about not the distraction piece, but the ecosystem that is Elon, which is to say, one of the things you keep hearing about is, so he has Twitter. He's now talking about doing generative AI. He's got SpaceX. There is this sense that, and he owns Twitter outright as a private company, Twitter, Tesla, public company, SpaceX, private company, but lots of investors in there.
Yeah.
He does move these engineers around from place to place to place to place to help in specific moments. There was a period of time where we heard that a lot of Tesla engineers were showing up on the doorstep of Twitter to try to assess what's really happening. Folks at SpaceX, now in the whole generative AI situation, how that's, and he's got a lot of AI folks inside Tesla that he's going to want to use in other places. How should a shareholder feel about that? In the sort of normal context, there would be people who would say, no, that guy works for you over here. He does not work for you over here.
It drives, believe it or not, some massive breakthroughs. There are SpaceX metallurgy engineers, materials engineers who've really transformed the way the Model Y gets produced.
Right.
And so you get these big breakthroughs by moving that talent and context switching them. So yeah, I can understand one side of the story where investors are upset. The other side of the story that doesn't really get told is how much value they add back to Tesla as they come in and help.
Who should be blamed for Tesla's plunging stock price and lower earnings? Is the problem with Tesla itself as a company, or with its CEO Elon Musk, who many said may not be completely focused on the car business? See what a GM board member has to say.
What do you make of this whole idea of these shareholders? And we've had a bunch of them even come on the program now.
Yeah.
Who signed this letter saying, look, you're doing too much, Elon. It's just too much. What do you think of that?
I don't think he's all that distracted away from the business. Like on the earnings call, he was answering questions at a really deep level, like on how the C++ neural nets work.
Right.
Like he's involved, and he has always had a lot going on, but he is incredible at managing his schedule and staying involved on the absolutely key topics. And you see, like they are still delivering more cars than they've ever delivered. I think anybody in the car business would love a 36 comp on a quarter. And he's got a lot of margin to play with.
By the way, I don't disagree with you. What I can't figure out is, let's say he was paying more attention. What would the result be?
Yeah, what would you do about the general economic environment?
Right.
Exactly. And because they've got a lot of margin, they're using that as a weapon. And even though they cut prices 6 times this year, they still in the first quarter delivered more margin than anybody else in the industry.
Tesla saw quite a lot of criticism following its release of the Q1 earnings report, with many describing it as a miss, even though the automaker beat Wall Street estimates. While these comments exist, CEO of DVx Ventures and former president of Tesla, Jon McNeill, has said that Tesla is still on the right track. According to him, Tesla remains the leading EV manufacturer, and investors may be putting their money into a venture that could be 10 times bigger than what it is today in the space of 5 years. Could he be right on this one? Well, we're just about to find out. Hey everyone, and welcome back to Tesla Tomorrow. McNeill spent 2.5 years as Tesla's president, heading up global sales, marketing, delivery, and government relations before heading to Lyft in early 2018, where he served as COO for 18 months. The GM board member has often shared his experience at both places, as well as the factors that he considers while making viable future predictions for the companies. Following the release of its earnings for the first quarter of the year, Elon Musk warned Tesla investors that product pricing would continue to evolve upwards or downwards. Musk said on Twitter that Tesla is not starting a price war, but is only lowering prices to enable affordability at scale. Tesla said overall revenue in the first 3 months of the year rose to $23.3 billion, up 24% from a year ago, as car sales increased. But profit in the same period dropped from a year earlier to $2.5 billion, affected by the price cuts and higher costs for raw materials and other commodities. On a conference call to discuss the results, Musk said he thought pursuing increased sales with lower profits was the right choice for Tesla, which already stands out among electric car makers for its profitability. The Tesla CEO told investors that profit will remain strong over the long term, noting that the firm's bottom line could be boosted after cars are sold using ongoing subscription payments for supercharging, self-driving, and other features. Is Musk's vision for Tesla actually realistic? And is the Tesla executive still the best choice of leader for Tesla? We'll dive into the details in this video. But before we start, if you like this type of content, hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. According to Musk, Tesla is laying the groundwork, and he expects the firm's profits to remain among the highest in the industry. He stated that it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future. Since the start of 2023, Tesla stock has been one of the best performers among the major tech stocks, and this was majorly due to price cuts. After cutting prices for its cars in December as well as in January, Tesla once again slashed prices in the US as the EV maker sought to boost demand. The price cuts came after Tesla said it delivered a record 422,875 vehicles worldwide in its first quarter. Tesla trimmed the prices of its Model S and Model X vehicles in early March, and in January, Tesla slashed prices by as much as 20% in the US, allowing some of its cars to qualify for a federal electric vehicle tax credit. The automaker cut prices between 2% to nearly 6%, with the largest cuts on Tesla's most expensive Model S and Model X vehicles. In explaining why Tesla keeps cutting the prices of its vehicles, the auto industry is pretty much divided into two camps. On one side, there are analysts who see an aggressive move by the leading manufacturer of EVs to gobble up sales and market share from its competitors, just as they're beginning to bring more vehicles to market. On the other hand, there are also critics who argue that as demand for Tesla's older vehicles begins to wane, the company feels forced to slash prices in order to attract buyers. Seth Goldstein, an analyst at Morningstar, suggested that Tesla is trying to strike a balance between securing the best possible prices and sustaining buyer demand, so that its factories run fast enough to reduce the cost of producing each vehicle. But while the price cuts increased, Tesla's car demands also affected its profit margin. This has not only caused a hit on Tesla's valuation, but it's also affected Elon Musk's net worth. Musk has seen his wealth propelled upwards over the past 10 years, with the meteoric rise in value of Tesla's share prices, which gained more than 4,000% in the decade since their initial public offering. He also owns more than 40% of existing shares in SpaceX, which was reportedly given a private valuation of $137 billion earlier this year. In late 2021, Forbes named Elon Musk the richest person in history, with a fortune nearing $300 billion. But despite remaining one of the richest people in the world, Musk's wealth has fallen drastically on the back of his Twitter acquisition and a raft of problems at Tesla, including slowing sales. Recently, a group of progressive Tesla shareholders wrote to the company's board of directors, asking them to make Elon Musk concentrate more on one of his many jobs, which is that of running Tesla. In addition to his role at Tesla, Musk also leads Twitter, SpaceX, The Boring Company, and Neuralink, among others. In the letter, the group of shareholders stated that Musk is not spending enough time at Tesla, and is also not focused on the issues facing the car company, including increased EV competition from other automakers. The letter alleges Musk's lack of focus at Tesla is causing problems for the company, although it doesn't spell out what should be done to make him focus on those problems. The shareholder wrote, "We each initially added Tesla to our portfolios because we saw Tesla as a true leader in producing products and services essential for our transition to a sustainable and green economy. Over time, however, we've grown increasingly concerned with the government's and leadership issues at the company." The shareholders stated that Tesla needs a board that will ensure that the CEO is focused on addressing these challenges, And they also added that the board's failure to restrict the CEO's outside commitments and ensure he's focused on solving the many challenges the company faces has caused them to lose confidence in its members. However, among the shareholders, Frischberg said that the company is not advocating that Musk be replaced as CEO, but rather they're requesting that in terms of governance, the boardroom should become less clubby, more independent, and responsive to investors. And probably they may be right. Elon Musk has faced a few woes in the past few weeks. Musk's US defense contractor, SpaceX, recently launched its Starship Super Heavy vehicle in an orbital test flight from its Boca Chica, Texas facility. According to reports, the rocket made it off the launch pad, but it also exploded, resulting in the FAA grounding the program for the time being until further evaluation. Musk is facing mounting pressure on Tesla stock, and it could force him to confront some harsh realities about juggling his other capital-intensive and highly levered side businesses. A Tesla investor, Dan Nathan, recently pointed to the mountain of debt that Elon Musk used to fund his Twitter buy, purchasing the social media company for $44 billion last year with a combination of bank financing and cash raised from selling Tesla stock throughout the course of 2022. Several other issues with Musk's enterprises have put the tech mogul's net worth on shaky grounds, but this could only be for the moment. While there are many issues with his companies, Musk has a reputation for always finding a way out. Even John McNeill affirms Musk's dedication to his company. He described his experience with working with Musk as fascinating, stating that the Tesla CEO was the best practitioner of his craft as an entrepreneur. McNeill also stated that it's hard to name another entrepreneur who has started 4 companies, all of which have more than $10 billion in market cap, and several of which are worth more than $50 billion. Do you think Elon Musk is failing his role as Tesla's CEO? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.